What's up, guys? This is Cruz from New Age Wall Street, and today we're going to go ahead and look at a setup and that I like to go ahead and use for my longs, and what to go ahead and look for. And it's basically accumulation. So a lot of people don't really look into this, but we're going to go ahead and take a look today. All right, guys. So we're going to go ahead and jump right in here. We're going to go ahead and talk about accumulation today. And before we go ahead and we get into that part, I want to go ahead and put into the trades into context a little bit. So we're going to go ahead and be using RKDA, which has been making waves over the last few days. You know, kind of making some big moves here, especially when it's been pretty quiet. But even before this goes ahead and starts trading, so one thing that you want to go ahead and look for here, and this is just part of me trading it in the actual setup, not necessarily what I want to talk about the accumulation part here today. But you want to go ahead and just take a look at the news. So I go ahead and I come in and I take a look at the news, and they had they had some news here about they have some soybeans about that are drought resistant, which is it's okay news. At least it's a catalyst. At least we have some type of catalyst. It's not up on no news. And then the float was 4.8 million when I went ahead and looked at it. And so part of that is that you want to go ahead and make sure that the float is small enough where you're going to go ahead and have some volatility to it, not so small where it's very dangerous. And then you want it to go ahead and be small enough where it's actually going to go ahead and move. So if you get ones that are too big, it's not going to go ahead and move even with some decent volume. So you want to you hit that sweet spot of not too big, not too small. You're just Goldilocks, right? So after you're done with that, you make your plan. You're able to go ahead and you look into your filings. I looked into the filings here. I did go ahead and see that on Friday. So we had this this gap up on Friday, right? And yes, so we had this gap up on Friday, and here it is. And so it was up here, and then I went ahead and looked in the filings, and I did go ahead and see that they were able to go ahead and raise, but we're far enough away from the point that they're able to go ahead and raise that I felt comfortable that I could go ahead and long this, especially with the way that it was keeping up. It was being held up during pre-market. So we had this gap up, and it's for whatever reason it's not showing me. There it goes. So so we had this gap up here, right? So it came up to 350, kind of faded down and held here, and then just kept on holding 350 right under 350. So it was holding up really well. So it wasn't just fading back down after it made this high. So I had some I had confidence that it was going to go ahead and stay up. Now the main part of this video and why I want to go ahead and make this video is based on accumulation and how to go ahead and spot it and how what it actually is. So this right here is the accumulation I want to go ahead and speak of here. So basically you get this channel that it trades in, or you go ahead and you get this consolidation that it bases out after you go ahead and you hit a high. So you'll hit a peak or a high right here, and then it'll go ahead and come down, form a base here, which it went ahead and did around this 270 level. And then what it is the people that are trying to go ahead and manipulate the ticker are buying at the lows, letting it go up, buying a little bit lower, and just over and over again accumulating shares over and over again to be able to manipulate the ticker up higher. This is one of my favorite setups here, guys. It's usually good for about $1 on the move. You get a spike up, right? So it doesn't necessarily have to be pre-market. You get a spike up. The shorts were very, very cocky here at 350 because we haven't had a runner to go ahead and bulldoze them in quite a while. So that they're really cocky. There's really good resistance here at the 350. And obviously, we got this little spike up here at the open, and then loaded in heavy here to go ahead and come short down, and they're looking for this breakdown past the 270, and of course they're going ahead and holding wanting more, because more is always better, and the shorts are pretty greedy. And what you actually go ahead and get here is this base out, right? So you don't get a fade, you get a base here. So you'll see a base, and that's the difference between you knowing that it's going to go ahead and fade, or if you're going to go ahead and get a squeeze. So a fade will go ahead and have lower highs and lower lows generally, and on the and a squeeze you'll have a base here, and you could go ahead and see where it's just moving sideways, and you can go ahead and see the bids propping it up at the lows here, so it doesn't die and go ahead and go to lower, right? Um, so that's what I've been. So this is my favorite setup here. So you go ahead and get the spike. You get your shorts really happy. They go ahead and come. The the price moves down, and then we just go ahead and trap the shorts to the upside and squeeze them up, and their covers are feeling the momentum to the upside with their covers here, and it's great. So like I said, this is my favorite setup. It's usually good for about $1, and I love it. It's something I look for all the time, and it's based off of this accumulation here that you're going ahead and getting. So the other part to this is that I do want to go ahead and talk about the the way that you use your indicators. So a lot of people want indicators to go ahead and give them the holy grail, tell you when to go ahead and get in, like trigger when it's going to go ahead and make a move, and it's not possible. So what your indicators are here for is to go ahead and help you read the ticker and the price action. So once you go ahead and understand that that's what the indicators are there for, they're not to go ahead and give you triggers and the holy grail on when to go ahead and buy. They're to go ahead and measure certain aspects of the price action, whether it be direction, volatility, some type of volume. Then your trading will go ahead and become a lot more accurate when you're using your technical indicators as they're intended to go ahead and be used. So right here, I'm measuring the volatility, and I go ahead and use the TTM Squeeze to measure volatility. And you can go ahead and see here that so the further it goes ahead and gets away from this center line at 0, and I don't know if you could go ahead and see it towards the to the right here because I have my pictures there, but this median line here is 0, and the further it gets away from the center line is more volatile than it is. And this is basically just made up of two indicators in one. It's based off of the Keltner channels and also the Bollinger Bands in one. So what happens here is it goes ahead and it shows me that it's going ahead and consolidating. So you see how this was just kind of sideways? It's kind of right along the center line, right? It didn't move too far away from it. But then we had this drop, right? So we had this drop, which shows the move away from the center line. And then obviously you go ahead and see that the volatility was decreasing and went back to the center line. And you go ahead and you get this trigger here, and then that's your get the fuck in and buy with the cross of the MACD, right? It's going ahead and telling you to go ahead and buy that it's going to go ahead and move in the other direction, which it does go ahead and show. And then you go ahead and you get this huge move here from 270 up here to almost 430. So it was an awesome move. I bought from 280 and then I got out at like at $4. So I made $1, which is usually my target on a long trade. So I'd like to at least make $1 on my long trades, and then at least 50 cents on a short trade. So anything else other than that is a quick nail and bell scalp. So that's how I go ahead and use it. So a couple other examples here. This was RKDA today, which is Monday, and same thing. You have this open, you have this huge volatility, you have this high, you have people going ahead and shorting this, and it goes ahead and walks back down, right? You have the bids propping it up here at this level, and then you go ahead and you start getting these higher lows moving up and higher and higher, right? And you can go ahead and see that the triggers here, there's a lot of the red dots here going in and trying to give me the trigger to go ahead and get in for this move. And even if you're getting in on this level here from around 650, it goes ahead and goes to 720, so you almost get $1 there. The main level you would go and start buying is $6 to the right here, which is well over $1, and that's the way that this is going ahead and made. So Now, there's another example I have highlighted that I was going ahead and just, to highlighting here. So you go ahead and you have, the kind of this move up, and you have, this higher here, basing out, and then consolidation, right? So you have the consolidation here, the highs, and you could go ahead and see, people were trying to go ahead and slam and short here because it was breaking this trend line, right? So it didn't. It saved here, and then it goes ahead and just moves sideways. You could go ahead and see that the volatility decreased here, and you just have this sideways. On the tape, you could go ahead and see that they're buying here, and then you could go ahead and see you have the cross here, my trigger, and then that's your go ahead and get in there at 380, and you could go ahead and move it all the way up to 470, I believe was it. So you're about 10 cents off from a dollar again on just a little bit of a move there in the middle of the day on RKDA. So if you're keeping track here, you're over a dollar here on this move, right? A dollar here, and um, this is what I can't think of another setup that is more fun to go ahead and trade than a short squeeze, and this is the best way to go ahead and do it. So you're looking for a low float, not too low that it's going to go and be dangerous. You're going ahead and looking at the filings to go ahead and make sure that the dilution isn't going to go to hurt you. It's far enough away for you to actually be able to go ahead and go long, and then you go ahead and you get this beautiful base here, and then you go ahead and get these higher lows, and then it just goes ahead and spikes here with the shorts fueling the move from their covers to the upside here from stopping out. So I just wanted to go ahead and make a quick video on some technical analysis and accumulation, how to go ahead and spot it, what exactly it is. I haven't seen it, too many people talk about it here within the last few days, but that's how I go ahead and use it, and I teach, that in the New Age Wall Street room. And if you guys have any questions on techno analysis or anything with your trading, I'm always happy to go ahead and help out. You guys could go ahead and DM me, email me, anything. Make sure you go ahead and you like and subscribe to the videos. Click on the bell so then you get notified when I go ahead and upload more videos on technical analysis. This is just the tip of the iceberg. I got way more tricks up my sleeve, guys. So if you guys need anything else, hit me up. Definitely always here, and you guys have a great rest of your night.